Hey, how you all doing? The Conclusive Indian has today brought the second episode in the whole loan series. The first episode was education loan and this is over home loan. So we'll discuss about the home loan, how you can take, how what are the benefits, basically the pros and cons. So before starting, let's look over what the people say about home loans. I have talked with few of them. So one of them, he said, I kept paying an EMI of 27,000 rupees per month for the whole 2 years, and the loan amount was 30 lakhs. When I went to the bank, I saw that the remaining loan amount was still 29 lakhs. So basically, he kept paying 27,000 rupees per month for 2 whole years. So he total amount of 6.48 lakhs was paid to the bank and only 1 lakh was reduced from his principal amount. Remaining 5.48 lakhs went on to pay the interest of the bank. So he was worried. Another customer says, why am I paying an interest of 9% per annum when new borrowers are getting the home loans on lesser interest rates? So I explained him due to there are some shifting rules and shifting charges. Your loan is in a different category. So these are some worrying questions or other pains of Indian home loan borrowers. Moving ahead. So what is the need of home loan in India? So basically in India we talk about lower class, middle class, they take home loan usually, and few upper class people they go for the home loan for saving purposes. Every family wants a home of their own. No one wants to live on rent. So there is an emotional touch attached with loan borrowers. In India, owning a house is a thing of self esteem as well. People take pride in owning a few properties. Now, people with low income or less savings go for home loans. Also, when family size increases, people living on rent hate shifting from one location to another, so they opt for home loan to buy a home of their choice. A basic saying in our country is roti kapra or makan. So as saying goes, people have started feeling a sense of responsibility to fulfill these three things for their families. Most important of all is safety and security. People feel safe in their own house, unlike those who live on rent. People feel more confident, frank, and safe. Let's look over to the requirement and need of the home loan in terms of sense. So people feel a sense of pride in society, a sense of security, a sense of success and accomplishment. Now, the home has been seen as the sense of success and accomplishment of one. They also start feeling sense of fulfillment, a sense of maturity, a sense of fashion statement, of course. That's why they, after buying home, they go for interior designers as well. A sense of responsibility, a sense of provider for the families, a sense of intelligence, and this list goes on. Okay, let's talk about some benefits and we'll discuss these pros and cons later as well. There are some tax benefits and the nil prepayment charges. Of course, the banks have started, they have stopped taking the processing fees as well. Then there are certain government schemes like PMA, Pradhan Mantri Awas Yojana. Balance transfer facility is there. Dream of owning house comes true for a common man. Long repayment tenure and easy EMI. You can extend your loan up to 20 to 25 years, so easy EMI. Then there is capital appreciation. Of course, you buy a house for 30 lakhs. In 5 years, the price would boost up to 40 to 45 lakhs. Of course, there is a capital appreciation. Then it saves rent. Of course, this is a myth. Saving rent is one thing because when you buy a house, you start paying the EMI, and 80% of the EMI is basically goes in paying the interest rather than the principal amount. It improves the credit score and it retains your savings. We'll discuss these points one by one. So there are some tax benefits. Let's look into them. Under Section 80C of the income tax, you get a deduction for the principal of the loan repaid up to rupees 1.5 lakh a year, and the interest paid is deductible up to rupees 2 lakh per annum under Section 24. These deductions are allowed from the gross total income before calculation of tax, thereby reducing the total tax payable. So these two sections are very important under 80C. So for example, if you're repaying your loan, say 4 lakhs in a year, and out of this 4 lakhs you repay 2 lakhs as the principal and 2 lakhs as the interest. So under section 24, the interest you have paid will be deducted, and under section 80C the principal amount will get deducted. Now you paid a principal amount of 2 lakhs, but the upper cap of the section 80C 1.5 lakh, so only 1.5 lakhs will be deducted from your total salary. Besides claiming the deduction for principal repayment, deduction for stamp duty and registration charges can also be claimed. So whenever you buy a house, you go to the nearest authority to get your house registered. So a stamp duty is being paid. Now that stamp duty you can show to the tax income tax in the income tax form, and you can get a tax rebate. Again under the section 80C, and the cap is 1.5 lakhs. So if you have already exceeded, you have gone beyond the cap by showing the principal amount under section 80C, in that particular case you're not going to get tax rebate for your stamp duty. Now there are two other sections. Section 80EE of Income Tax 1961 can be claimed by first-time home buyers for the amount they pay as the interest on home loan. The maximum deduction that can be claimed under this section is rupees 50,000. Okay, so there are some eligibilities for this. This should be your first house, allowed on interest paid only, and you should have exhausted the section 24 first, and loan sanction date should be in between 1st of April 2016 to 31st March 2017. Then there is another section 80EEA, and it has been newly included in the Income Tax Act 1961, and same would be effective from 1st April 2020. Now the eligibility is individuals should not be eligible to claim reduction under section 80EE. Loan sanction should be in between 1st of April 2019 to 31st of March 2020, and your house total worth should be less than 45 lakhs. So now what are the ambiguities here? Home loan provides tax benefits under section 80C. The rebate we get is up to 1.5 lakhs, which is the upper cap and fixed. The actual scenario let's discuss is section 80C limit of rupees 1.5 lakhs is already exhausted even before principal payment comes into picture, because several other things like LIC, children fees, EPF, PPF and other provident funds comes into the same section. So even though you are paying a significant amount towards principal repayment every year for your home loan, you may not get much benefit out of it. Now this is very simple under section 80C. For example, if you're invested in LIC and in the mutual funds, all these come under section 80C. So most of the salaried person, middle class person, they have already exhausted this upper cap, that is 1.5 lakhs. So there is no benefit for most of the people here. Now let's talk about tax benefits under section 24. Here the cap is 2 lakhs. So now this is a problem. Even if the interest paid is rupees 3 lakhs, one cannot show the whole amount as the cap is 2 lakhs. Let's talk about my case. I paid 4 lakhs of interest 2 years back, but I could only declare 2 lakhs under section 24. Tax benefits on second house. In case of second house, you are eligible to claim reduction for the entire amount of housing loan interest paid under section 24B of Income Tax Act. So there is another section 24B. If you own a second house, you cannot avail the tax rebate under section 80C. Now talk about the prepayment and category shift charges, which we have discussed earlier. Simple enough, as per RBI guidelines, there is no prepayment charges on the floating rate of interest. For example, if you take a loan at 8.3 and later after 6 months the interest becomes 8, so there shouldn't be any processing or shifting charges. Your loan interest rate would automatically become 8 after the 6 months. Remember, if the interest is, you have taken the loan in the month of January and the interest rate is 8.3, and if in the February circular has come that the interest rates are going down, then in that particular scenario you will have to complete the 6 months first. That means only in the month of July you will be able to avail the lower rate of interest. Now let's take an example. I've taken home loan and I'm prepaying it in small chunks. No charges are levied, although there are some charges when you shift your loan category. Now, most of the customers say that their rate of interest is higher, while new borrowers are getting lower ROI. So here I would like to clarify that floating ROI gets changed every 6 months or yearly as per the bank guidelines. Also, there are several categories where a loan might lie, so visit the bank and get your ROI adjusted. Now remember, if you get your loan category changed, one time shifting charges might apply. Now this is my example. I was paying an ROI of 8.7 and I found new repo rates have been declared. So I had to deposit 6,000, basically 5,900. The true fact is I deposited 5,900 and those were the shifting charges, and now my ROI is 8% only. So these are some pros and cons. So either you can complete your time period, your loan might come to that, or if you want that before your time period is over, you want immediately your ROI should get changed to the as per the new government schemes, then you have to pay a little amount to the banks. Now there are some government schemes launched by Honorable Prime Minister Modi ji. So time and on, government keeps bringing schemes to avail home loans, and this time it's PMA Pradhan Mantri Awas Yojana. It is an initiative by Government of India in which affordable housing will be provided to the urban poor with a target of building 20 million affordable houses by 31st March 2022. Before gaining insights, let's see the eligibility. The applicant's family must not own a house in any part of the country. Family comprises of a husband, wife, and unmarried children. In the case of a married couple, either a single or a joint ownership deal is allowed, and both options will receive just one subsidy. Now there are 4 sections. One is EWS, that is economically weaker sections, whose household income is less than 3 lakhs. Then lower income group, we normally call LIG. Household income should be in between 3 to 6 lakhs. Then medium income group 1, and then MIG 2. So the range is 6 to 12 and 12 to 18 lakhs respectively. So let's talk about the 4 sections. As already discussed, there are 4 sections: EWS, economically weaker sections, then LIG, lower income group, then MIG, medium or middle income group 1, and then 2. Annual household income is up to 3 lakhs for EWS, 3 to 6 for LIG, 6 to 12 for MIG 1, 12 to 18 for MIG 2. The interest rate subsidy by the government is 6.5% for EWS and LIG, 4 and 3 for MIG 1 and MIG 2 respectively, and the tenure should be 20 years for all. And this is the maximum tenure. It doesn't mean that if you take a loan for 20 years, you cannot repay it in 15 years. This is the maximum tenure which has been declared under this PMA scheme. Now, maximum eligible home loan amount. For example, the amount listed here is 6 lakhs for the EWS, 6 lakhs for the LIG, 9 lakhs for the MIG 1, and MIG 2, 12 lakhs. For example, if a certain person lies in MIG 1 and he takes a loan of 30 lakhs, so not complete his loan will not be eligible for the PMA scheme. Out of that 30 lakhs, only 9 lakh amount will be declared eligible to avail PMA scheme. So for example, let's talk about a certain case, but before moving, let's discuss what should be the carpet areas. For EWS, the maximum carpet area should be 30 square meters. For LIG, it is 60. For MIG 1, it is 160. MIG 2, it is 200 square meter. This is the maximum. And the subsidy which people will get: for EWS, they will get 2.67 lakhs. For LIG, they will get 2.67 lakhs. Again, for MIG 1, they will get 2.35 lakhs. For MIG 2, they will get 2.3 lakhs. So moving over, let's talk about MIG 1. If the income of the household per year is rupees 12 lakhs, say, maximum tenure of the loan is 20 years. Interest subsidy, as we discussed, per year is 4 lakhs. Eligible amount is 9 lakhs and maximum subsidy is 2.35 lakhs. And rate of discount is 90%. So the monthly EMI, if the should be 5834 if the loan is 9 lakhs. If the loan is 9 lakhs, the maximum EMI is, monthly EMI is 5834 with interest subsidy if the person doesn't get the interest subsidy, the loan amount which he or she has to pay is 7894. That is, there is a direct benefit of rupees 2000 per month in case of MIG 1 PMA. Now, this example is for MIG2. The household income is rupees 18 lakhs. Maximum tenure of the loan is 20 years, and subsidy given by the government is 3% under PMA scheme. And the eligible loan he or she can take is 12 lakhs. So how the interest subsidy it becomes 2.3 lakhs. So let's check out the last two statements. The monthly EMI without interest subsidy is 10,528, and ROI of the bank it's 8.65%. Now if he gets the PMA scheme, if he avails the PMA scheme, the monthly EMI becomes 8059. So there is almost a benefit of 2500 almost per month. So long repayment, tenure, easy EMI, and again this is a myth. If you go for a long tenure, for example, if you take a loan for 20 years, so easy EMI, of course EMI would be easy, but you have to repay almost double. So let's check this example. Loan amount is 30 lakhs and the rate of interest is 8.5%. Household income is 6 to 10 lakhs, so PMA subsidy becomes 2.3 lakhs. So the remaining loan amount is 27.65 lakhs, which the person has to pay in 20 years. EMI becomes 25,000 approximately. Total payment done over the 20 years is 60 lakhs approximately. So you paid almost double for your loan. Let's see a simple scenario. Case 1. If you do a part payment of 1 lakh every year, you can reduce your EMI by 700 to 800 per year. You can easily finish your loan long before 20 years, and the amount you paid for 30 lakhs of loan would be around 45 to 50 lakhs. So here you are saving 10 to 15 lakhs on the total loan amount. Take another case. If you increase your EMI, instead of 25k, say you are paying 35,000 per month, that is increase your EMI by 10,000, that becomes 1.2 lakhs in a year. So in this case you are repaying the loan around 45 lakhs and you save almost 15 lakhs in the complete tenure of 20 years. Remember guys, if you are taking a loan of 30 lakhs and you are just going by your EMI, you are not increasing your EMI, or you are not doing part payments, you will have to pay the double amount even if you avail the PMA scheme, that is Pradhan Mantri Awas Yojana scheme. You are paying the double amount. So do not go by bank people. They will tell you tax benefit and all. Just see the reality and save money. Capital appreciation, of course, this is true. This is a perfect and true point. The property in India has been raised in price since independence. Land is one asset which never diminishes in prices unless unfortunately the property is being declared haunted. Now this is just for funny. Yeah, any market has always seen an upward appreciation of residential or commercial property. So yeah, once again you can take home loan and repay it in timely fashion. You will not regret. So here I'm not saying do not go for home loans, because buying a home is a common man's dream, as I already explained in first 2-3 slides. So go for the home loan, but try to repay as quickly as you can. Saves rent, again this is a myth. Let's see the example. Ramesh used to live in a 2 BHK in Noida on rent. The rent was 16,000 a month. Ramesh bought his own house by taking a home loan of 30 lakhs. Now the EMI is 26,500 for 20 years. After PMA, his EMI became 24,500. Again, in each and every slide I'm adding PMA because most people, they are availing this Pradhan Mantri Awas Yojana facility. It decreases your EMI. Out of this EMI, only 6,000 gets deducted from his principal amount of loan. So he pays around 19,000 as interest. Earlier he was paying 16,000 as rent. Now he is paying 19,000 as interest. So this money is all gone in vain. You're giving money to bank. Earlier you're giving the money to the landlord. Buy or rent is a separate topic, and I'm making another video on the same. Yeah, I'll make. So now further Ramesh says that he's taking tax benefit on house loan, but earlier he used to take tax benefit in HRA component. Again, this is one thing. While you were on rent, you used to take the benefits on HRA, which is a component of your salary, and now he's taking the tax rebate under home loan, section 80C and 24. So these are one and the same thing. Now, this is a true fact. It improves the credit score. A CIBIL score, what is it? It is like a fingerprint. It clearly gives a picture of a person's financial health and how responsibility he uses money. Most people are not even aware of the credit scoring process until they apply for a loan and get rejected. So, if your CIBIL score is not good, you're not going to give a loan. I took education loan. I repaid it in 5 years, and the total tenure was 7 years. So I repaid like 2 years before the tenure got completed. Then I took the car loan, and today I have taken the home loan. So my credit score is good because I am paying on time, and basically I am paying before time. So I'm not saying that paying the loan before time improves your credit score, but if you miss the EMI, then your credit score will go down. Your CIBIL score is based on your credit behavior and past credit repayment track record. Banks submit your loan details to the CIBIL on a regular basis, which over time gets documented in your credit report and is used to calculate a score. Let's giving you my example. I took education loan, did not miss even a single EMI, also repaid earlier, so my credit score went up. I pay all my credit card bills, loan EMIs on time. So again, here I have written credit card bills. So if you're not paying credit card bills on time, that goes onto your CIBIL file. So as credit score will go down if you're not paying any of the bills on time. Okay, so now paying home loan on time will give you a better credibility, and banks will trust you, thus you can choose business loan in future without any hassles. So this is one thing, because home loan is a big thing, I agree, but if you need a business loan, you should be having a very good credit score. Retain your savings. Of course, this is a very true fact. It is always better to keep a buffer in your account for emergency situation. A part of saving can be used for down payment, but not as a whole. Make sure your account has some saving for bad times. Home loan helps in these situations. True fact. Now the documents required: employee identity card, loan application, completed loan application form duly filled in, affixed with 3 passport size photographs, proof of identity, PAN, passport, driver license, photo ID card, anything will work, proof of residence, recent copy of telephone bills, electricity bills, water bills, and Aadhaar card. Property papers, of course, the OC, occupancy certificate, payment receipts, or bank account statement showing all the payments made to builder, seller, approved plan copy, Xerox blueprint, and registered development agreement of the builder. So these are the few things. If you're buying a flat in the society, you have to show the occupancy certificate and the builder buyer agreement, etc. And also the last 6 months bank account statements for all your bank accounts held by the applicants. Now salary slip and form 16 from employer, it's required. If you're non-salaried, then ID return for the last 3 years, balance sheet and profit and loss statement for account for the last 3 years. So these are few things which are required. Which bank to look for? Now go before going to the bank, look, just Google around and find out which bank has the lowest interest rates, the low processing fees, and there are no hidden charges, no prepayment penalty, interest charges on daily reducing balance, repayment up to 20 years at least, home loan available as overdraft, interest concession for women borrowers, and lesser approvals. Lesser approvals means lesser hassles, that's it. Now the eligibility and interest rate: resident type, resident should be Indian, minimum age is 18, maximum is 70, loan tenure up to 30 years, yeah. Interest rate is varying from 7.9 to 10.5 in India. And the current SBI rate, let me tell you, it's 7.9 to 8.5 depending on which category you lie. Of course, I have already told you can shift your loan category. So guys, thanks to all. The Conclusive Indian ends here. Like and comment and please subscribe. Thank you all.